we should have up a chart of DXY. And as I'm speaking, you can see that we are trading at essentially 2-year highs, right? I guess it'd be like 23-month highs. Since May 2020. Pretty much the best level since the onset of the pandemic. So yeah, one thing I like to do here is let's look to the left of the chart and see what we've got. We do have some levels, right? This was October 2019, and then you've got again February 2020, and then of course, like I said, May of 2020. So we do have kind of a natural level, if you will, right here to react to. And this is, early yet here in the day. We don't have a whole lot going on in terms of econ data the rest of the week. All you've got really is tomorrow. You've got Canadian payrolls. But there are a few things I want to point out on this chart. So one, if you zoom in a little bit here and just kind of go back to the low from January, you can count it's pretty obvious, a 5-wave move to the upside. So again, an Elliott, right? So 1, 2, 3, 4, 5. Now, how high this carries, unsure, obviously, but you do have a channel line up here. It's just a line parallel to this trend line down here, right? So, excuse me. Excuse me, I get a drink of water. You do have a channel line, which is just a hair above 100, which is something else actually to point out, right? That big round level, round number at 100. So, take that into account as well for possible resistance, if you will. But a few more things on this. So I'm going to throw up RSI. Here's an RSI chart, or this is a RSI plot below price. And again, this is a daily chart. And you do have a pretty drastic, at this point, drastic divergence, right, with momentum. Now, I'm not one of these people who, there's some people who see RSI divergence like everywhere. I only, quote unquote, count RSI as being divergence if you have the indicator printing below 65, okay, or on the opposite side above 35. So what that does is that eliminates trying to call turns at overbought conditions, which is another way of saying just strong trends, right? So in this case, you can see RSI right now is 63.5. So assuming that we close today somewhat near here, we would have that divergence in place. Also, another thing is when you're looking at RSI and calling for divergence or whatever, you want to look at the closing price of the chart. So look at a line chart, right? Sometimes you get a wick. It looks like you had a high, but really you don't, because again, RSI is calculated using closing prices. So you don't want to look at the wicks, right? The highs and the lows. You want to look at the close when it comes to RSI. Another thing to pay attention to here. So I'm going to throw Euro on here, and it might be kind of tough to see, but you've got, this is actually dollar euro, not euro dollar, because I wanted to show it in conjunction with DXY, right? Essentially, DXY is the inverse of euro, right? And you do get, think Dow theory, right, for currencies, with the combination of DXY euro and as well as dollar Swedish krona, which we'll look at here in a second. But you can see we do have that new high right now in DXY, we actually don't have a new high in dollar euro, or a new low, I should say, in euro dollar. And that's a non-confirmation, right? That typically does occur at a turn, right? Now, that's not to say that the euro can't go to a new low, or, dollar can't go to a new high against euro. Just my point is it hasn't happened yet. Okay. So if we do get some reversal evidence, then we would have kind of that at our back, right? So what do I mean by reversal evidence? Well, if we're looking at, just go to euro real fast. There's a couple things here, but daily chart. Okay. So here's what we have so far. Reversal evidence would constitute something like, a bullish outside day, a stronger close up above here. You can just see quite clearly this former support at 109.45, right, has been resistance the last 2 days. A close above that, right, would, to me, would give me the green light to, try the long side again, stuff like that. Let price kind of be your guide on that. And finally, don't forget, we still are at this trend line from the 2017 low, okay? Right there on euro. Okay, so that is kind of my focus right now, is being focused and aware of what's going on with euro and DXY down here. Finally, I do want to take a peek at this and remember that we've entered, if you will, the kind of bearish seasonal tendencies for the dollar. Okay, April does tend to be a rather bearish month for the dollar. Now we are a week in, and obviously that has not happened yet, but doesn't mean that it can't. So, the combination of, again, the DXY euro non-confirmation, the DXY divergence with daily RSI, the seasonal tendencies, just the, pretty clear-cut levels on DXY that we looked at, not just on the chart, but just, that round 100 number. Lots of ammunition here, I think, for a reversal. Now, one thing I haven't seen yet, which frankly might be the most important, but is, extreme sentiment. I go through we've done this before on these webinars, but go through the headlines and haven't really seen any outlandish headlines regarding the dollar. So I'd like to see that. Let's, maybe if we continue to hold up the next day or two, maybe we'll get something, over the weekend talking about how dollar strength is foregone conclusion or whatever, right? And again, the best headlines to fade are the ones where you get those predictions, right? Dollar headed to 105 or, whatever. Those tend to occur when everyone's most comfortable in making the most sense of the move that has occurred. And when that happens, the move tends to be over, right? It's like you kind of go with the trend, if you will, as long as it doesn't make sense to the, to the masses. And, once it finally makes sense to everybody, that's when the move is over. It's kind of crowd psychology and trading at 101. Okay. So we have that. Euro, we went through. Euro, I really don't have anything else to add to euro other than what we just went through with DXY. Before I wrap up here, sorry, I'm back. I want to remind everybody that we are looking for traders at Scandinavian Capital Markets. So if you go to, I'll just share the screen here again, but if you go to Scandinavian markets / get funded, you will see our, you can check out our information about our prop trading program. Basically, you know, the goal is to become a money manager with us. There is, of course, an assessment test that must be passed. There is no time, you know, requirement in order to do that, like some other places that run these programs. You know, you don't have to do it within a week or a month or whatever, right? That's not how the market, you're trading on the market's time. So you don't have to do any, you know, stupid forced trades. So yeah, come, you know, check this out, scandinavianmarkets.com / get funded, and come trade with us. Start your journey to become a money manager.